Hey, it's Mack with PriceActionTradingSystem.com, and today is Tuesday. It's December the 3rd. This will be our chart lesson for today, and you can see we've got a nice trend channel down here on a larger picture. There's a couple of little trends within that, a couple of trading ranges as well. We really spent from the open until about maybe the first two hours in just a trading range, and then but really what it was, there was a bigger channel here, and it was probably a little harder to see until you got these first two swings here, and then when we bounced off it the next few times, then you kind of pick up on it. But otherwise, it was a little difficult to see. Early on, it looked like a trend, and you can see that. I mean, this thing is selling off strongly. You draw your trend line right there. You drag it down and see, and you notice you bounce right there. And so we're looking for a chance to get short off the other side over here. And you can kind of see it moving over, and you get a first entry right there. Bounces, makes a little double bottom, then it pulls back, and you get a second entry there. And you could have entered there, but notice all that there's a lot of overlap. So we weren't quite back to the EMA, we weren't quite back to the trend line. So I didn't take that. I waited, and then notice you get the bounce right off the trend line. And so I liked waiting for here to go short, but you could have gone short right here because it's a second entry. It's a double top. Man, that's a huge move down. It would have worked either way. You would have had to kind of ride this out. But I circled that whole thing for that reason. But I wanted to show you how it doesn't look like a trading range. Oops. Just yet. Early on it didn't, you had to play it like it was a trend. And I really thought this thing would go much lower. Both of these were easy. It was an easy scalp. But you didn't get any runners out of it. I really thought that thing would go lower, and then it bounces. And, then we're kind of back inside with that support area right there. And then notice you got a new low, a first entry short, a pullback, and a second entry short right there. It fails. So when we bounce off this trend line, notice how those bars start bouncing and then it turns up. You could have gone long right there because right when it ticked higher right there, it's a failed second entry short. Now notice this new low. You're coming up. You turn down. That's the first bar that breaks lower. There's your first entry. Then it turns up again, and then it breaks lower right there. So the first time you get a bar that breaks higher now before you get a scalper's profit, and you can see it bouncing back off that support area right there. It's a failed second entry short now. So you got a chance to go long, even though normally I'd say you wouldn't go long here because you just had a break of this channel, and this was a pretty bearish move down. But you figure what they're going to do is they're going to run it higher. They never came back and tested anything over here. So that's my first bet is we're going back to probably try to test these lows and then maybe these lows. And so we start heading higher, and you see that was an easy scalp. And draw your trend line off these swings right here, a couple of swings, and draw it up, and you'd look to exit right along here, and then finally look, you touch it, and you touch it again, and then it turns down. So there's a perfect measured, I think they're perfectly measured moves. There's leg one, and then your little correction, and there's a little two-legged correction. Yeah, and that's a perfect measured move. So an aggressive trader would probably go short there since this was a downtrend, and this is the first break of the trend line. You know you're going to try to get a retest. And you can see prices headed lower, and then we bounce right there. And so again, an aggressive trader would probably go long there because then you kind of got this little channel working up. That's the first break. So we're probably going to get a retest, but you've got this trading range working here, and it's a bounce off the low side. By this time, you've moved it up a little bit higher right there, and so there's plenty of room. So you enter right there, and you got a scalp, and then guess what? It turns back down. Now it's a trading range, and it's real bearish, and there's a negative tint to the day, so you got to take that one. Another easy scalp. And then guess what? It bounces again right there at the low. I was tempted to draw this one in green, but now you've got a failed second entry. It's not really a failure because you got your you got enough ticks, but you really got a two-legged move here, and I think it's pretty close. I don't think it's quite a measured move. I think it comes up short. No, it's a perfect measured move as well. And so you got two legs down, and guess what? You're probably going to get another leg up, and you probably then need to be thinking, you know, we got a range here, but if we went higher, we're probably going to get a measured move like that right there. And you can see we got a good bit. We actually went a little bit higher than that and had made a double top and then a reversal type pattern and then went lower there. So, but anyway, you think about going long there. You might have waited on the second entry, but it didn't come to here, and then it's too late to enter, really. You did have a failed second entry short here, but I wouldn't be entering long here near this resistance because there's a good chance it turns and goes lower again. But it does go up, and then it's just kind of chopping around. And you could have gone ahead and drawn this. I believe this is the channel, and then your break, two legs, two attempts to go lower that failed, and then you get your move back to a new high, and then you get a little reversal type pattern. But we just kind of went into another range. But you could you got a little channel working up here too, and notice the break, the retest, and we tried it again, couldn't get up. But notice there's two legs back right here, and we bounce right off to retest of that breakout area, and that's a nice little reversal bar. It's a little aggressive because we're in a trading, it looks like another trading range. We just kind of moved the trading range up an equal distance. Let's just look. If you look at if you kind of go from the lows to the highs on the closes, and then you do the same thing over here, kind of the lows to the highs, you can see it's kind of an equal distance. You can see that's just an equal distance trading range. And sometimes it'll be like that on the lows to the highs. And so an aggressive trader would probably go long right there. You got a new high and you're trending higher. First entry, pull back second entry. It did bounce off the same lows. I think it's really aggressive. There's overlap. There's room to get out, though, before getting to that double top. And, you know, they kind of went lower twice, couldn't do it, so you're probably going to go the other way. And then it turns down. You can't get in this one until it's too low, so you can't go short. But when it bounces there again, you got a little doji, you know. Again, by this time you should have had your bigger channel drawn. As soon as you got this swing right here, you know, you draw it and you notice it turns down off of it again, then again, then again, then again. But it's not really inside it, so it looks more like a range now than it does a channel. But when we finally got back inside it here and couldn't close above it and got that little reversal bar, I like that short right there. Plus now you've got those two swings, and notice how you couldn't really get outside them, and boom, you don't know that it's going to do this, but once it starts going down here, you got to look for your measured move here. I mean, we came up maybe a tick short there, maybe two, but that's what I'd be looking for when this thing turned down again. But we really just moved this range up an equal distance is all we did. And I really like the longs here. And because we were working higher, I was a little leery of these shorts now because we traded up into this. But when this line started to hold and it turned down again, and then you drag this one down and it fits down here with kind of your equal distance overshoot. Notice you overshot it here, so you got a little overshoot up here. And it gets back in and closes and turns down. So that was the first short I liked after that point. And it was off to the races. And then you got another bounce off the trend line right there, but this was not a good signal bar. And you were so close to the lows. This might actually be down here. I think it's probably more like that right there. But you still don't have much room here. So I didn't like going short there. But when it pulled back and turned down off of it again, I liked it right there. And it takes it a minute to work on down. But it was too dangerous to go short again after that because you never notice how you're starting to veer away from this trend line. Even if you drew it over here, you're still starting to veer away from it, and you get a lot of overlap. And so you look how long you've been away from the EMA. somewhere in here, and you've almost got a measured move here too, and so that's another reason. You could have actually gone short on this one maybe if you use a limit order, and it would have worked. But I just think it's, notice how we didn't go very far lower there, and then this was the better setup, and it still didn't go much further, and it bounces up. And so I just was a little leery of it. And notice how these were way down here, and they're all kind of touching. And then these start kind of veering away from that line. The line may actually be over there, and we may have overshot it to begin with. Um, and I think that's probably more valid. It looks a little more valid there because you catch all these moves up here, and you're catching all these. But they don't really bounce here, and usually you're going to bounce. So maybe it is over here. I don't know. It doesn't matter. It's just when you start getting real choppy like that, you're looking for your measured move, and we're real close right in here too. And a lot of times it'll bounce early, but sometimes it'll overshoot it. And then you start working up. I didn't like going long in here because we didn't really get back down. You know, you could have looked at this line maybe being right there, but it just doesn't fit very well. And then you don't have the equal distance. It looks better there, and we're not down there yet. So this is the first break of this short-term channel. You don't want to go short on the first entry. You might have gone short right there, and if you did, it would have worked. But I got a little leery because that's pretty bullish, and we didn't quite have a measured move. And let me show you that. There's your first leg up. So you're looking for a measured move. Well, it's closer than I thought it was. Just eyeballing it doesn't look that close. And that's why it's always good to draw those lines and put them on there. And you've got a little trend line working up here too. Could have drawn this, and that's another reason not to go short yet, because you haven't had a break in any kind of retest attempt. And you can see that little channel. That's why I'm always saying to draw these. Sometimes I don't put these back on, but I always draw them. And you should draw them because they keep you in the trade. And you can, it'll tell you when to get out. And you can see that's bouncing up. And then we finally get the break right there, and you try to get a retest, and it's a failed second entry long, so I like going short right there. And then when we tried to go long again and turn back down, then you got to figure we're coming down for the retest. I really thought we were heading straight on down to this line, and we bounced again. Then you get a second entry short right there, and I actually could have. Not only could have, you should have gone ahead and drawn that line on there. And I really think the trend down started here, so this is how I would have drawn this. Right off those two closes. And you can see it kind of fits. We got a little overshoot right there, but it was fitting pretty good right down through there, except for the overshoot. But we had a kind of a downward bias today, so you expect to get more overshoots to the low side than the high side. And so I like that one. That was really the first turn down again off that line. And you might have drawn your line a little different. Let's see if we can. You might have drawn it like so and use those closes. But I think you still get to the same place. Get those out of the way just so you don't get so confused with them. Oops. And you can see it still works. And so some people saw it that way. I kind of liked it better the other way because you're not getting anything fitting right here. But a lot of times when you get a gap like that, that's because there is kind of a support resistance type area coming through there, and you can see it catches it right there. And then we start closing inside it again. So you could have seen it either way. It's not that critical. I always, you hear me say it, that, there's more than you don't have to be precise, but you have to be close. And you can see that one right there. That was the one I like. Oops. Man, I always grab the wrong line. And that one just fits better to me. We did get a little overshoot there, but there's two legs back to the EMA, the trend line. Look at that bearish bar. This was a big bar, so I would have used a limit order right here, and it would have gotten filled on either one of those, and then it turns down. And you might have even considered going short right there on this one, and I think it would have worked. But I think it's just really too aggressive. 87. 1/4, and you see it would have been a 4-tick failure. So no, it didn't work unless you used a limit order, and then you didn't get filled. So until it came back, and then it never went lower again. So, and this line's probably over here just a little bit, and this is your break, and then there's your 2 legs down, and those are 2 measured legs. So I'm guessing that's probably more what it is, but I saw it the other way and didn't play with the lines till later. And you can see that's almost a perfect measure. It basically is a perfect measured move. So there's your break and your 2 legs down to a new low, and then we reversed. And if you wanted to keep trading, you know, you draw your lines. There's no entry here until here. There's a second entry long right here. But you know, you got a short-term trend line right there too. And you can see how that's holding prices nicely till you get a break. You get 2 legs down, and then you get 2 legs up to a new high, and then you sold off again. And so that's what I saw today, mostly shorts. It really was a trading range. And this stuff is hard to trade. This one gave you a little bit more to trade than this one because the bars got real big up here and a lot more overlap. Here they bounced pretty quickly off each side, and and the bars aren't so big. But you didn't get that up here. So, and the only reason I really like these longs, they're a little more aggressive, but it's because we traded up into this, and so you know, we kind of had a upward bias. And they kind of gave, especially this one, it gave you a little room. But I think they both were aggressive. I think you were better off just to skip this right here because you're going to end up losing. Now, these, you got little bars on each side, and it was, you know, a lot easier to trade that one. And notice how the lows are real straightforward across there, and these are not so straightforward across here. I'd say it's probably more like that right there, and your closes are up there. And so anyway, I just think this was real aggressive. I almost drew that whole thing in purple, but aggressive trader would have taken those, and I definitely like this one right here because of the failed second entry long. Notice you can treat that as a new high. First entry long, pull back, second entry long, and it fails and turns down right off that line. So I like that one a lot. It's kind of like a little breakout pullback short. But notice, let me show you this. It's a little hard to see too. Plus there's 2 legs up right there. Notice this bar right here made a new low and turned up. There's your first leg. It pulls back and turns down, and then it makes another leg back up, and and then it turns down. It actually turned down and bounced up and tried to come back down, and then it turns down again. So you really tested that new high twice, 3 times. And you know, you see this line holding, so I really like that trade. Of course, you don't know that it's going to take off like that, but that's why you hold runners. And, you know, I'll be honest with you, I'm looking to exit right here, and look, it just keeps on going. Where, you know, the odds tell you it's probably going to bounce there, and it did hesitate there, but it just shot right on through and kept going. So, you know, it doesn't always pay to exit on the other side of the support or resistance area either, because sometimes it blows on through there. Most of the times you'll come out better off by doing that, but sometimes you don't. And a lot of times I'll leave a lot of money on the trade trying to second guess the market, and when I should probably just wait. And if we get a break higher for another bar, if I just move my stop down above each bar on your runner, you wouldn't have got stopped out to here instead of getting stopped out here. And when you get stopped out here, you got most of that move. So anyway, and you could keep moving your stop down below each swing high, and then guess where you get stopped out? You don't get stopped out till right here, and you get almost all that move. And that's the better way to do it when you really start to get a good move like that. But I'm impatient, and I don't like to give my money back. So I'm the world's worst of exiting. Most of the time I'll be right, but occasionally, like today, I blow, you know, I only got half of that move right there by jumping out when we hit this support area right here. So, you know, you try to be smart and think you're outsmarting the market, and sometimes it costs you. But, you know, that's the way it goes. But that's the way I am. I'm not one that can watch myself make 3 or 4 points here and then take a bounce and let it take it back or either turn into a losing trade. I'd rather take my money and wait on another entry, and I got another chance right here. And you really might have even thought entering right there, but you weren't back to the, I just think it was risky taking a first entry there. But when you see this one bounce twice off the line and trade real negatively, then I like that one. And plus that confirms this trend channel line that we'd already kind of drawn down through there, and it's probably more like that right there. So it really might have confirmed it right here, and that might have even been good enough to be the break of it right there. But we closed outside it, but it's very negative, so I don't really like that as being the a break of it. I think this was the break, and then you're two measured legs down, and then you got one more leg, and then it reversed. So that's what I saw today. It's 20-something minutes worth. I'm just kind of going on there, but I know some of those little details of what I'm thinking helps you, so you at least understand what I'm looking at, what I'm thinking, see if you're thinking or maybe looking at the same thing. So, and remember, there's always other trades that I don't mark. If I don't mark them, especially if they're during periods that I have marked, there's reasons I don't like them. So just keep that in mind. And this one's probably worth talking about right here. There's probably a good chance that some people got tripped up on this second entry. I don't think it got 4 ticks. 92 1/4, and it only went to 93. But that's one reason I don't like it. It is kind of a little trading range right there. But you got your two measured legs up, and we never have hit the low side yet. We never had to have a retest for this thing. So I was still expecting prices to go lower, and I was looking for a trap. I really thought we'd get it right here, but it went a little higher. But I'd rather miss this trade right here than risk entering here. And it could have turned on up and went back to the trend line again. But there's not, if you enter this on a stop, there's not enough room to get out before these highs. And you can see that resistance all the way across there. And when it held again right there, that was kind of telling. So that's 1, 2, 3, 4 trips up. And so when it did it a fifth time, you might have even thought about going short there, but I liked it better when it made the little trap right there and then turned down. And you go short. It turned up and went higher first, so you go short right there. And plus that kind of helps you more with that line right there too. So, but anyway, that's what I saw today. What else? I guess that's about it. And this was a failed second entry long right here. So that was another reason I liked going short there. But you definitely had to take it right here. But I think that's it. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com. Hope you had a great trading day and off to a good week, and we'll be back to do it again tomorrow.